What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we have a green day in the cryptocurrency market, and it looks like the futures for the stock market are up as well, with Bitcoin up over $1,000 today, and the rest of the market mostly green. So in today's video, we'll take a peek on what's going on here with Bitcoin. We'll peek at the XRP price chart and talk about the altcoin market. We'll also talk about the stock market and the giant thread that I posted over here on Twitter yesterday on why it's time for me to make the decision for myself that I do believe the Dow Jones Industrial Average has popped. Now, popped can be a scary word. I talked all about that in this thread, how when the word Great Depression comes to mind, we think of how in the 1930s, it only took 3 years for the stock market to lose 89%, but how my base case is something more of the lines of kind of a slow bleed out that could take decades to last. But in doing so, it helps me build a framework to work from moving forward. And while it sounds scary, not necessarily all that bad for the next couple of years. And so we'll dive into that. But I'm definitely happy to see that Bitcoin has bounced off of these lows. Like I've been talking about for the last couple of weeks, I've been making all of my final accumulation entries on Bitcoin down in here. I'm fully in on Bitcoin. Should we take out the low set back there in June, I will sell the Bitcoin that I have accumulated in here at a 5% loss. But for the first time since 2019, I've actually been accumulating Bitcoin down in these prices due to the plethora of reasons on why it seems like Bitcoin has a good shot at finding its bottom already, including the 50-week crossing the 100-week moving average, a 786 Fibonacci retracement of the entire run since C19, the previous all-time high over here on the market cap, previous capitulation fractals already being completed, and of course, oversold RSI, which we can see mark the bottom of the last two major bottoms that came in for Bitcoin, that once we finally went oversold, we were done. So it's never easy making buys or making sells. I remember when I was selling back up in here, when you make that stuff publicly known, every critic out there likes to comment on that, call you a dingus. Definitely this one's been no different. All the $12,000 to $14,000 calls. Just because we've popped up today, we've gone up $1,000 doesn't mean everything is safe and dandy and out of the woods. But of course, it feels better to be 10% to the upside on this thing from that area than it does to be 5% to the downside, right? So nice little pop in here. And while it feels good to be off the lows, just, for me personally, I kind of remind myself that, hey, you know what? We have behaved from a time perspective in here. We'll go back and we'll use the whole thing from in here, that the time perspective of how long we've been working out this area has been almost identical, right? So here's the peak from when Coinbase IPO'd back in April, and we look at how much time has elapsed in here, and you would say to yourself, well, if this thing's Wyckoff accumulating in here, we're about halfway through the Wyckoff accumulation. You would still have a move back up to the top of the range, followed by your creek and then your spring afterwards, if we're following a Wyckoff down in here. So feels good to be off the lows, but I do keep my own personal expectations in check, thinking to myself, you know what, we've just been behaving a lot like this. It's probably not quite time yet. I'll take any surprises to the upside that we can get, but I still think to myself, this could drag on for a while. As for the broader altcoin market, still, we're just hovering above the June lows. We're hovering above the 200-week moving average. Not a whole lot to say in here outside of maybe a potential ABC backtest that's already occurred in here. Now trying to find a base in here in order to work its way up. Then heading over to the XRP price chart. Yesterday, it did close below the 200-day moving average in here, and we're still under there today. As for the weekly moving average, we could see still just not quite able to get ourselves up above that 200-week moving average. Looking at the shorter time frame, still from a consolidation standpoint, it's been able to maintain that September 23rd low, which would be a crash retrace back to the 702 reaccumulation. So long as we're still holding this low, there's a potential that this is wave 4 accumulation with still another wave up in this leg to go before really a longer accumulation. But nothing has changed from yesterday. Should we take out that low? As we've seen in Wyckoff accumulations before, that it's very typical to come back and backtest this level down here around 38 cents. So still unchanged from yesterday's action, still just hovering in that same exact price level, waiting for a decision to come in here. I'm indifferent on which one will occur. Both make logical sense to me. We spent 130 days down in here. My expectations were that we would get out of that Wyckoff accumulation. We have gotten out of it. Now it's at a point where it's just kind of trying to digest the whole move at this point. So In the end, nice move over here in the markets today. Nothing is really like a breakout move that's happening out here today. We're more of just kind of like reclaiming things, moving back up, but nothing's really breaking out. It's still just like range action that's happening here in the market. So always great to have a green day rather than a red day, but obviously we need a whole lot more to start saying like resistances are being broken. Moving over to what we were talking about yesterday, we're talking about the DXY. I had put lines on the chart showing where the tops of Bitcoin had come in and where the bottoms of Bitcoin had come in, recognizing that we had noticed that the bottoms of Bitcoin had come in prior to the tops of the DXY ever coming in. And so far, our bottom for Bitcoin has come in way back here when the DXY was about 103, 104. Yesterday, we were pointing out the Fibonacci retracement levels in here, noticing some reactionary things happening in here. So far, so good. DXY has still held in here. Again, I'm very humbled by the DXY. It is one of the things I've had incredible difficulty with. But as for today, after yesterday's kind of big move in the DXY, it's really actually kind of calmed down. And the DXY, of course, is the US dollar currency index, the strength of the dollar versus a basket of other currencies. But it is paused out today. And we can see that in pre-market trading that the market does look green. We do have green over here in the NASDAQ, which still has been able to maintain its June lows and maintain on top of the 200-week moving average. We have green over here in the S&P 500, which as well has been able to maintain its June lows and maintain its 200-week moving average. And we have green showing up over here in the Dow Jones Industrial Average. However, the Dow Jones does sit underneath its 200-week moving average and has pierced below the high set back there in February of 2020. And so with that, I think it'd be a good opportunity to run through this thread that I posted yesterday over here on Twitter on what I see going on over here with the Dow Jones. Now, it's not the same for the S&P 500. It's not the same for the NASDAQ 100. Like mentioned, the NASDAQ still sits way above its February of 2020 high, and it sits on top of its 200-week moving average. But when it comes to the Dow Jones, let's go ahead and talk about it. And for those who think that it's not important to talk about the stock market and that Bitcoin is its own animal and it's going to rise for like a phoenix from the ashes while the world crumbles, well, we have no history of that. We only have history of Bitcoin being created in January of 2009, which means it has only existed in the run up of the Dow Jones. So every time the Dow Jones has had a pause or gone into a bearish period, Bitcoin also went into a bear market. So it's important to look at both of them, I believe, due to the confluence of how the behavior of Bitcoin is at the exact same time as the Dow Jones. And even in this time period, it's been no different. As the stock market has pulled back, so has Bitcoin. So let's dive into this. As the markets closed yesterday and the Dow Jones was down another 329 points, I posted over here that I believe the Dow Jones Industrial Average has popped, that the long bear market or Great Depression for the Dow Jones Industrial Average has begun. Many have built careers over the last decade proclaiming the Great Depression was upon us, only for the Dow Jones Industrial Average to rip up 400% while they cried wolf. Essentially saying that I recognize that a lot of people call for the Great Depression all the time. If you're on Twitter and you follow a lot of people in financial Twitter, you probably know the accounts that are always screaming, crying wolf. They sell tons of books, they've got millions of followers, and they've just been crying wolf the whole time. So to make a post like this is not to capitalize on fear, which there are people who love to capitalize on fear. It's not the point of me doing this, and that's why I say I'm going to build a case as to why the 30-plus year bear market for the Dow Jones Industrial Average has begun using charts. I'll leave it to experts to decipher trade calls, central bank planning, currency debasement, geopolitical wars, commodity shortages, etc. But here, I'm just using charts. The first thing is Fibonacci extensions. The Dow Jones, NASDAQ, and S&P have all exceeded 3.618 extensions, with the S&P actually hitting the 4.236 extension. And we could see that the Dow Jones Industrial Average has been in a 13-year bull run, the NASDAQ has been in a 20-year bull run, and the S&P 500 has also been in a 13-year bull run, just like the Dow Jones Industrial Average, with two of them exceeding the 3.618 and one of them exceeding the 4.236. As we've talked about 100,000 times on this YouTube channel, This is what both Bitcoin and Ethereum did during their past bull runs, with Bitcoin's market cap hitting the 4.236 extension and Ethereum's market cap hitting the 4.236 extension, which is also what Ethereum did at the end of its 2017 bull run. After consolidating for 7 months, Ethereum went for a 4.236 extension and completed its bull run to have its biggest bear market in its history. We're going to reference to this chart a couple of times. Like the example of Ethereum in 2017, the Dow Jones Industrial Average has done the exact same bull run ending with 5 waves heading all the way up. As we talk about on this channel, the double tap on top of the all-time high, bull flag, breakout, violent backtest, V-bottom, which, as we went through C19, referencing this the whole time during C19, it took a lot of kahunas, but I was sitting there saying, look, I think this is nothing more than a double tap, bull flag, breakout, backtest, V-bottom. And that's where it really became famous, was with this channel during C19, that we were doing something like that. And I referenced back to this exact same chart over and over again, showing Ethereum's double tap on top of the all-time high, bull flag, breakout, violent backtest, V-bottom. And that the Dow Jones Industrial Average has done the exact same bull run ending. Also, when we zoom out on the last 100 years for the Dow Jones, we can see it is occurring right where it is supposed to be occurring, at the end. So right here, we've got 100 years of the Dow Jones Industrial Average. And as we could see, same consolidations, same places, same final endings, everything aligning for this to be at the final ending of a massive 100-year bull run, 90-year bull run. Now, one thing I've considered is that this pullback is just an initial profit-taking wave. We see those all the time at tops. We also saw that for Bitcoin and Ethereum in 2021, which then hit the 4.236 extension. And I've talked about that a lot on this channel, saying, hey, this pullback's pretty deep, but hey, you know what? It seems like it could just be the initial profit-taking wave. Then we go on, like we see in Ethereum, it barely exceeds the 3.618 extension. Boom, then we go on and hit that 4.236 and then lights out afterwards. Essentially, that's what this is. The initial profit-taking wave above the 3.618, then going on, and then we're out. So I've considered that the pullback that we're having right now for the Dow Jones Industrial Average is just an initial profit-taking wave. And I guess that it is still possible that this is an initial profit-taking wave, and I'll have egg on my face if it is, but I really don't think it is with how deep the Dow Jones has now gone, taking out the February of 2020 high and the 200-week moving average, showing that even over here on Ethereum, by the time we reached a point that we had crossed below the height before our major backtest, that had signified that our parabolic growth was done, and we had already completed all 5 waves, and by the time we had come back down below this wave, it signified we were no longer doing parabolic growth anymore in here. So in a parabola, this shouldn't be happening. We shouldn't be taking out this moving average, nor taking out the February of 2020 high. If it were wave 4, we should be holding the February of 2020 high, but instead we're breaking through it, which means to me officially it has popped, which adds more validity to showing that this was actually the wave 4 backtest, a violent backtest for wave 4, which did hold on top of wave 1. But Great Depression, scary phrase. The last Great Depression crashed in a matter of 3 years, losing 89% of market value. While this is what the blueprint shows, it's not exactly the same blueprint of how the Dow Jones has behaved the last decade, although similar, in which what we can see prior to the Great Depression, we had a broadening wedge happening here on the Dow Jones, as we also had here in the 90s and 2000s, a broadening wedge before finally going on over 400%. They are similar in regards to having broadening wedges and percentages. They're very similar, but our structure of how we've moved up has been slightly different in here, especially with our double tap, bull flag, breakout, violent backtest. As you can see, there was no backtest. This was just parabola ending. But it's also very possible we're nearing the capitulating moment of this move that will eventually lead to a giant retrace bounce that lasts for a couple of years, only to never set new highs, then roll over with the whole Great Depression taking 30 years to reach the bottom. showing how that now that we have exceeded beyond the height of February 2020, showing what a corrective wave would look like before rolling over again. And that's my speculative guess, that this isn't some 3-year implosion of the Dow Jones like in the 1930s, but one that lasts for the rest of many people's lives, never seeing new all-time highs again. A retrace bounce sounds logical rather than utter collapse like the 1930s. So, what does that mean for Bitcoin? We don't know yet. Bitcoin was created during the depths of the great financial crisis. It has only existed in the bull run ever since. But we do know every pause, range, and bearish period for the Dow Jones Industrial Average created bear markets for Bitcoin, pointing to the moment in which Bitcoin was created, in January of 2009. But like I mentioned earlier in this video, something to note is that neither the Nasdaq nor the S&P have taken out their 200-week moving averages or their June lows, which is why I'm specifically saying the Dow Jones in this thread. S&P and Nasdaq may be added later, showing that the Nasdaq is still holding on top of that 200-week moving average way above the February of 2020 high way back here. And the same goes for the S&P, above the 200-week, way above the high set back in February of 2020. But the Dow Jones is giving a grim message that 401k holders are not going to like. This is what a pop looks like. Now, like I always say on my YouTube channel, bear markets are incredibly difficult to navigate. I consider them exponentially more difficult to navigate than bull markets. If we get some kind of bounce in here, I'll consider it a gift from God. It may explain why Bitcoin is holding up during all of this, showing what corrective waves look like in here. For all of our sakes, I sure hope this or something similar isn't the outcome, with of course the 1930s. But again, this is a chart perspective. There are many who provide opinions on many moving parts, such as geopolitical events, central bank behavior, commodity cycles, etc. I'm a guy on the internet making videos and posts about charts, not a financial advisor or certified expert. But I do believe the top of the Dow Jones is in, and that many of us will never see a new all-time high again in our lifetimes for this index until we are old and gray. And I already have some grays coming in. One thing I'll be watching for in particular is all the talk from Congress about banning themselves from owning stocks. For ethical reasons, they and their family members will be forced to sell all of their stocks, showing one of the proposed bills over here on congress.gov, stating this bill requires each member of Congress to divest or place in a blind trust any specified investment owned by the member, which I quoted here and just made sure everybody was aware that divest means sell. Requires each member of Congress to divest or place in a blind trust any specified investment owned by the member. And one thing to remember is that the Fed did this for their members too, at the top, back in October. The Fed banned policymakers from owning individual stocks. So the Fed sold the top. Then what did they do? We're going to raise interest rates. We're going to be, we don't care about anything. We got to crash the economy. It didn't matter after they sold all of their bags, right? So considering that the Fed officials selling their personal bags of stocks marked the top, if Congress gets a bill to pass forcing themselves to divest as well into a retrace, I'll be running for the hills into a bunker. Definitely a sign I'm watching out for. And if you've noticed, right, they keep bringing it up. They always remind us that they're working on this bill or policy that Congress isn't going to be owning stocks, right? But of course, they haven't done anything about it. Why? Because the markets have been falling, right? Duh. October, this is the wave that the Fed got out in. Now Congress needs their wave. They've been talking about it, but once those markets started pulling back, there's been no action on it. But they make sure to remind us every couple of months that they're working on it. And if they finally take care of business and try to pull off a smooth move for political gain of being like they're the good guys because they finally sold their bags and it's wrong for them to own stocks, but they do it into a retracement, I'll be running for the hills. Because we just saw how the Fed has behaved ever since they sold their bags. They got out, boom, raising interest rates, don't care. What happens if Congress gets out as well? You have a Fed who's not in the market, and then you have a Congress who's not in the market. What's going to be their priority? Is it going to be pushing the stock market up higher? They're all going to be sitting in cash. So what are they going to be more interested in doing? They're going to be way more focused on getting an interest rate on their cash holdings and not caring about the stock market. Again, all speculative, all tinfoil hat, conspiracy theory. But if we go into a retracement, in particular, an ABC correction, or back to the 618 or 702, and as that thing gets up there, Congress goes ahead and bans themselves from owning stocks, forcing themselves to divest or sell their stocks into the retrace. The writing is on the dang wall. So let's talk about the actual chart of the Dow Jones, because when we hear Great Depression, we hear the bubble pops, it can be scary. And we know that the Great Depression from the 1930s, it only took 3 years to move in a straight line down. If it goes in a straight line down in 3 years, heading all the way back down below the lows of the great financial crisis, God help us all, it's going to be insane. Anybody who can predict a complete crumbling, crashing market like that, God bless them. I personally have to look for more of a structured, orderly flow happening in here for something like that to happen. So my personal thoughts are more along the lines of an orderly type of topping coming in for the Dow Jones Industrial Average. So with where we're at right now, it's signifying to me that I have to accept that it seems very likely that the top of the Dow Jones is already in. And so if it's heading down, what can structures heading down look like? And even if we use this as an example to say, hey, by the time you got back down below here, you know what? You were actually reaching nearly the end of the move, right? So look where we are right now at this point in time. Where would that be? That'd be like really just having a little bit more to go in here before then, whoop, a pretty quick move right back up. Essentially creating an ABC correction in here before then moving on to the next leg down. And that's going to be my base case moving forward for the Dow Jones. So what is it saying to me? It's saying, hey, oh no, it looks like the bubble has popped, but so long as we're not pulling off a 1930s move and this thing is orderly, that a bounce could be coming pretty soon and this thing could be pausing out. And the thing that we know about ABC corrections that happen is that they tend to last a whole lot longer from a time perspective than the initial fall takes to happen. And so what would it mean? I mean, you might be getting a couple of years in here where you're shifting sideways before things finally turn over. And just to have something structurally like that, I mean, that gets you all the way till 2025. I'm not saying that's a freehand drawing, but, compress that even more, make it more just like this, even that right in there, that still takes you out here into late 2024. And as I try to guess the structure of a bear market for the Dow Jones Industrial Average, that's the most logical structure for me to follow, considering we have followed one so logical the whole way up. But as we have now taken out this level and dipped below here, it invalidates it as being a wave 4 and acting much more like the first initial popping of a bubble. So if we do have something like that, right, if there's still a couple of years of working this out before it then rolls over and heads down, the big question then comes for, well, what happens with crypto during that time? What happens with a lot of the stock market during that time? For something like that, if you looked back to this time period in here with Bitcoin, with the altcoin market, that's like when alt seasons happened. Do we see a lot more of that kind of GameStop stuff happening, AMC stuff happening in the stock market during that time period? And the Dow Jones, which is comprised of, of the largest market caps in the world, you have Apple and Microsoft in there. You have your big names that have actually popped in there, and we see some rotation happening here over the next couple of years where the index doesn't move up, but some of the smaller caps get a lot of that money rotated into them as yield is being chased throughout the market. I think that's possible too. The last thing that I want to sit here and say is that I think we're going to pull off a 3-year crash and crumble. Maybe that's me in denial to think that we won't do that. But I would say things have been significantly more orderly than when we actually popped for the Great Depression back in the 1930s, that things just really let go of themselves and never stopped. We've been much more orderly at this time. If you were to kind of look at a time comparison here on this one right in here, you would see that we would already be significantly lower in some type of crumble like that. And it would make logical sense as to why Bitcoin is still holding itself in here, right? Why is the Dow setting new lows and Bitcoin still just following the structure of what these last bears have done and holding at critical levels like the 786, a previous all-time high, 50-week, 100-week, capitulative fractals. Why are we still holding ourselves together? And well, it may be possible. We're nearing the end of this kind of first wave happening here for the Dow Jones and for the stock market, and that the next couple of years may be pretty mediocre, but that the crumbling that we've been seeing for the past year is nearing the end. And so that is my base case now for the Dow Jones Industrial Average, is that I do believe the top of the Dow is in at this point. The NASDAQ and the S&P 500, both are still holding those June lows and those 200-week moving averages. But, if they both do something similar at the exact same time as the Dow and go back in with some type of ABC in here into a retracement, of course, I would have the same thought process with those as well. But we have seen in the past, right, even looking right here at the NASDAQ, where the NASDAQ during the dot-com boom and bust, that it lost 83% of its value here from 2000 to 2002. This is like the Great Depression happening over here on the NASDAQ. But during that exact same time, the Dow Jones Industrial Average lost 38%. It wasn't necessarily the Great Depression for the Dow Jones Industrial Average, as it was the Great Depression for the NASDAQ. So I, of course, will be keeping an eye on this at the same time as the Dow Jones, but I could see slight behavior that is different emerging from the NASDAQ than from the S&P. Like mentioned, this thing still has not hit its 4.236 extension, just like the Dow Jones has not hit it either. And so there may be slight divergences between the different indexes. But to have that happening over there on the Dow does lead me to believe that we have already seen the top of the Dow already come in, as parabolic structure has been lost. However, not is all bleak. If we are going into a corrective format, and this is an orderly fall, there would still be a couple of years of retracements and bouncing around in here as money is washing through the system, as the big names like Apple and Microsoft are no longer the ones that yield is being chased in, but potentially the smaller and mid caps. So long as it's not a 1930s crash and crumble, my base case is retracements, and that would likely be good for crypto during that time as well. So keep an eye on it, but I thought I would give a verbal explanation of this thread in addition to just typing it, so you can hear it coming from my mouth as well. And that's going to be it for today. So there we go. Wanted to walk you guys through my thought process, not be one of those guys who just capitalize on selling fear to people, but really showing you exactly where my brain is at just by looking at the charts. Definitely not something I want. I want markets to go up for forever. Of course, that's what a lot of people think has to happen because we have to keep printing money and markets have to keep going up for forever. But one of those things I'll be keeping my eyes on are to see if Congress does force themselves to sell, because we've watched the behavior change out of the Fed once they sold all of their bags. Imagine if Congress no longer owns stocks either. What would they do? Would they so freely spend all that money? Or will they start tightening it up finally? We'll see. But all right, green day over there in the markets today. Bitcoin up $1,000. Markets holding their own today. We'll check in again on it tomorrow. I mentioned yesterday that I was feeling under the weather. Boom, I'm all good today. But my daughter is still down for the count for the day. So not C19, which is good, but on some antibiotics and hopefully getting back to normal. But all right, guys, that's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.